Hello and welcome again. This is Islam Ahmad. I will be your lecturer today. Welcome to GoDo online webinar. Please confirm if you can see my screen and hear my voice clearly. Okay, it looks like everything is working fine. So let's jump into it. Before we start, please take a minute to read the risk warning. The risk warning is written both in English and in Arabic. So the risk warning state that trading in Forex CFDs and other derivatives is highly speculative and carries a high level of risk. It's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Please take a minute to review and read the risk warning before we start. Of course, you know, this webinar will have a recorded version on our website, so you will have more time to review the risk warning if you need it. Let's move on. Today's topic will be a very important topic. Maybe this is the most important aspect when it comes to trading, the psychology of trading. When we speak about psychology, we always face two very strong emotions. This is the emotion of greed and fear. So today we will try to find a way to make greed and fear our ally. So let's start by stating that we always hear the advice to avoid fear and greed in trading, but today we will learn how to handle and use them as our allies. So we will not avoid them, but we will try to understand and use them in our favor. So let's start by defining the word. What is fear? Because when we try to handle it, we have to start by understanding it. Actually, fear is natural response to perceived threat or uncertain situation. It serves us to protect us from potential harm. So actually fear is something good. It's not bad, it's good. It's in our system, it's an instinct in our mind, in our body that give us alarm when there is a threat, when there is potential harm. So fear actually is something good. It's not bad. In the context of trading, fear can manifest in several ways. So in trading, we have the fear of losing money because, you know, a trader may hesitate to enter a trade or cut losing position to avoid further loss. So the fear of missing out, the FOMO as we call it. So a trader may trade or enter positions at not good prices to avoid missing out on a potential gain. So for example, we have an uptrend. You couldn't catch the trend while it was starting. So it's already moved a lot. And now you have this fear of missing out. So you try to catch the trend and you buy, and then you find out that you bought in the peak. And actually the uptrend has reversed to be a downtrend. So this is the fear of missing out made you make this mistake. There is also the fear of being wrong. So a trader may become cautious, overly cautious, or analyze the market overly, or seek validation from others because he fears that he might be wrong. So he has his mind, his strategy, but because of the fear of being wrong, he cannot take the decision. He needs approval or validation from others. This is also a fear of being wrong. So the consequences of fear, the fear will lead us to hesitation and indecision, and this will lead to missed opportunities. Also, deviation from the trading plan and poor risk management. This can be caused by fear, and also increased stress and reduced confidence in trading abilities. This is all consequences of fear. So how to use fear in our favor? Now we know what is fear, we know how it works, we know how it will affect badly if we didn't handle the fear, how it will affect badly our trading. So how we use this into our favor? First of all, you have to consider fear as a red light. It's a warning light for danger. So you understand that whenever you feel fear, this is not a bad thing. This is just alarm telling you that there is a danger in this way. So the second thing is you use fear as a wall, preventing you from taking irrational risk. When you have this red light, when you have this alarm sound, it gives you like a wall. It prevents you from going outside your rational and wise thinking. So fear is good in this way. So you use fear to your advantage to set a good money management plan. This is how you will use fear, and we will have more explanation, and also actually we'll have some live trading examples, but this will be in the end. Let's move on to greed. This is the second emotion, the second strong emotion. It's equivalent to fear. It can affect us. So we will start by defining greed. What is greed? When we say the word greed, what actually we mean? Greed simply is the desire for more, the desire for more profits. So this is often driven by the sense of entitlement, or you believe that you know where the market is going, you know the market, you understand the conditions, you believe that it will continue always as you expect. So in trading, greed can manifest in several ways. So the first manifestation of greed is over trading. So when you feel that you will win more, so you want to trade more, so you enter multiple positions in the hope of maximizing gains. So often you do this without proper risk management, because when you increase your position, you increase the volume you trade, this also increases risk. So you do this, you do over trading without calculating your risk management. So also you sometimes ignore completely the risk management. So you fail to adhere to stop loss levels of your trade, or the positions sizing. You overtrade, you place larger positions than you should. This is also from greed. And also the third thing is holding on losing position. You refuse to accept the loss. You refuse to accept that you did not know where the market is going. So you hope that the losing trade will eventually turn into your favor. So you keep holding it, and it keep moving in the red position. It keep increasing your loss. This is because of greed. So as we mentioned, the consequences of greed will be excessive risk taking and potential for significant loss, deviation from the trading plan and lack of discipline, and so overconfidence will lead to poor decisions. How can we handle greed? Before we go on, please confirm that you can hear me and see my screen. You should now see how to use greed in your favor. This should be your screen right now. Is it working? Okay, great. Let's move on. So to use greed in our favor, we should consider greed as green light. So you see, greed, green, just we change the D and to N. So greed is a green light, show opportunities that we might gain more. So this is not a bad emotion. Actually, it's a good emotion, but we just use it as a green light. We shouldn't act on it every time, but we should use it to know where is a potential opportunity. So we use greed to try to find the best way to make profits within the risk management plan we already have. And also we use greed to our advantage, so we don't close trades so early and keep good money management. Sometimes you have stop loss with 50 bips and take profit with 100 bips. And also you see the market moving into your way for like 50 bips. So this is 50% of your target. If you feel that you are afraid, you might close this trade with only 50%. If you feel greedy, actually in this way it will be a good to be feeling greedy, because it will keep you in the trade to get more of your profits. And also, as we mentioned before in our money management webinar, you can even raise your stop loss to the entry point and then stay in the trade until it hits the final target. So let's try to manage our fear and greed. How we can manage fear and greed. This is what we will talk about now. So as we saw that fear and greed is just giving us signals. This is the first thing you have to understand. Whenever you feel fear or greed, this is signals. Just like when you are driving or walking on the streets, there is red light and there is green light, okay? You shouldn't act like it's green when it's red. So you have to use your mind, your eyes, to use their lights and go onto your way. So fear gives you a signal that there might be a dangerous situation. Greed gives you a signal that you might gain more, but you don't need to act only upon these signals. So what should you do? Actually, what would you do to minimize the impact of fear and greed and other emotions on your trading performance? So you have to consider some strategies, and I will give you 10 strategies or advices you should do to handle fear and greed and also other emotions. We will start by stating that you shouldn't act only on emotions. This is the first and most important thing that you should know. You must have your own logical setup to enter a trade. Okay, actually, let me take a moment to mention that our upcoming webinar will be complete trading plan. So if you don't have a plan, you please join our upcoming webinar. It will be the upcoming Thursday at 6 p.m. Dubai time. I will guide you. If you don't have already a complete trading plan, I will guide you how to make this trading plan. So you must have your own logical setup to enter a trade, and you must set your exit point before you enter the market. So when the trade starts, you don't touch your exit points. You don't act in your emotion. This means if I'm in the trade, I'm trying to buy long, okay? I'm buying euro dollar, for example. I have set my stop loss in a logical way. I have set my take profit in a logical way. I have my technical analysis or fundamental analysis. I know what I'm doing. Now, after I set this stop loss and take profit and I enter the trade, I shouldn't move anything, including stop loss or take profit, unless I have this in my trading plan. For example, I have 100 pips as a target and 50 pips as stop loss. So in my plan, in my initial plan, before the trade start live, I know that if the market move 50% in my favor, I will move my stop loss to the initial entry point. This is decided before the trade start. This is not emotional. This is logical, and also I plan this before I enter the trade. So after the trade is live, I don't touch. So for example, I have 50 pips stop loss. The market move against me 20 pips. I don't touch my stop loss. I don't increase my stop loss. I don't close the trade with this 20 pips. I wait because I already have my stop loss set, and I don't move or touch the stop loss or the take profit unless I have this planned before the trade. So this is the first and most important thing, is to do not act on emotion. Have your trading plan before the trade start. You have to know all the steps of the trade when you are going to enter. What's your stop loss? What's your take profit? If you are going to move your stop loss, as I mentioned in this example, you have to decide this at a certain point before the trade start. And this is the first strategy you have to apply. So don't act in your emotion. And the second strategy or advice, they call it don't marry your position. As you can see in this picture, this funny picture on your screen, it's sometimes you marry your position. It means like, I will stay with you forever, for good and bad. You shouldn't do this. You shouldn't. It's easy for a trader to get stubborn and hold on a trade just because he hopes it will turn around, or close a bad trade as soon as possible to take your loss and move on. Your trading strategy will suggest the next move. So as we mentioned in the first strategy or advice, you already set your stop loss and take profit. So you enter the position. Sometimes traders move the stop loss or even erase it to the position now without stop loss. So now he married his position. He's with the position until it moves to his favor. This is wrong. Don't ever do this. Don't marry your position. This is just one trade. If it hit your stop loss, it's fine. Go back to your strategy and move on and try to make another trade. This is the second strategy or advice. So the third strategy or advice is to follow each trade with a break. This is very important because trading goes on a rapid pace. You don't get caught up in your action. Take a moment to think about something else. Then come back and start trading. For example, I can suggest to you, and this is something I do, if you have 2 bad trades in a row, just take a break. Take the rest of the day off, okay? Don't trade again in this day. If you already lost 2 times, I think this is time to take a break. This is very important. Sometimes the thin line between whipping your account, losing all your money, and just losing 2% or 5% is just to follow this strategy, to take a break after 2 losing trades. So please take a trade, take a break from your trades. I suggest 2 trades is fine. 2 losing trades is in a day is fine. Just if you did have this 2 losing trades, just take a break. So the coming advice or strategy is to set a fixed point at which you stop. This is coming after the last advice. So if, for example, we set 2 trades in a day, you have to have a stop loss for your account. As you do your trade, you do have stop loss for each trade, right? So you also must have a number of losing trades at which you stop. For example, you may say, if I lose 10 trades in a row, I will stop and review my trading plan. This 10 trades, as we said, it will not be in a day. I suggest you 2 losing trades in a day is enough. So for example, you had 2 losing trades every day for 5 days. This will come to 10 losing trades. If you come to this point, you need to stop. You have to stop. You have to review your strategy. Try to understand that situation, why this is happening. Maybe the market conditions is not right for you right now. For example, your strategy, your analysis is trend following, and the market is working now sideways. It's moving sideways. You will lose all your trades. Whatever you do, buy or lose, you will just lose everything, buy or sell, because it's not moving in a trend, or vice versa. If you are having a strategy that depends on range, so if the market is moving like in a strong trend, it will take you out. For example, you have this RSI strategy that when it comes above 70, you sell because the market is overbought. This is a strategy. Okay, it's fine. Sometimes it works. But if you are in a very strong trend, just like when the dollar yen have rallied before. So in this market condition, your strategy will lose one time after another. So you have to fix a point at which you stop, and I suggest this will be 10 trades. This comes also with the 1% or maximum 2% per trade I mentioned last webinar, if you recall. So if you should have this 10 trades, each trade shouldn't have more than 2% of your account. So after this 10 trades, you should not have more than 20% loss of your account. Then we will come to the fifth strategy. You shouldn't keep track of your earnings. So doing the math on the earning while the trade is live, this will get you emotional. So concentrate only on trading strategy. Then at the end of the trading day or week, you can check out how well or poor you did money-wise. So for example, if you have this trade live now and you have like 50 pips of target. So after 10 pips, now you calculate how much money you are gaining, what are you going to do. Now you can have extra food in your lunch. Don't think like this. Don't think money. Think strategy. Think why you are already in this trade, how you will go out of it. You just stop loss or take profit. This is the only thing that you should keep track of. Don't keep track of earning. You can do this at the end of the day or at the end of the week. You should do this, but at the end of the trading session, whether it's 1 day or 1 week. After this, we will go to the sixth strategy or advice to keep your mind on the plan. Okay. Sometimes you have like 2 trades, losing trades and then winning trades and then losing trades. So you want to win every time. No, this will not happen. Don't let the results of few trades change your overall strategy and approach. Stick to your plan. Stick to what you learned and what you have planned. Okay, we know that traders, actually good traders, win 6 or 7 trades out of every 10 trades they get. So sometimes very good traders only win 4 trades out of 10, but with these 4 trades they gain profits, because the 4 trades they gain profit double or triple the losing trades. So at the end of the 10 trades or the months, he will get profit. So keep your mind on the plan. So the 7th strategy is to don't confuse wisdom with fear. This is very important. This is very, very important. You have to know the difference between wisdom and fear. Using logic and reason, this is wisdom. This is not fear. So this may make you hold off on a trade, but make sure that this is only by logic, not fear. So for example, you are trying to get long in a position, but there is, in the same time, there was some news, some interest rate news, for example, and the market expected the news to be like to fix the interest rate. Then the news came different from the expectation. Actually, they increased the interest rate. So you may wait for some time to understand the market, how the market will behave. This is wisdom. This is not fear. So please don't confuse wisdom with fear. And the 8th strategy is to watch out for greed. Greed can make you stay in a trade when you had planned to exit, hoping to milk it for a little more profit. I have done this myself. I have seen this a lot. You have this trade, it's great, the market is moving as you expected. There is a certain level you had set your take profit. You should now have gone outside the market, but you, at the last pip, you choose to erase the take profit level. So now you are still in the market because you think that this will get you more. You think this will give you double the profits. And then the bad thing happened, and it turns out actually to be a losing trade because you even didn't move your stop loss to the entry level, and because of that the trade ended up losing. So watch out for greed. I saw this a lot. I even did it myself. So please, you shouldn't change your stop loss after the trade start, and also you shouldn't remove or change your take profit. Make your decision before the trade start. Actually, this is the bottom line for all I'm saying. If you want to control your emotion, don't touch the trade after it starts. Decide everything before the trade begin, and after it begin, don't change anything unless you already plan to change something. So you have to manage your stops carefully. So when you set up your stop loss and take profit, make it in a rational way, make it in a analyze way. So you know where is your level. You have your stop loss, you have your take profit, you know this is the right way. So when the market move in your direction or against you, you already have your logic. You should think carefully about your stop loss and take profit before you place the trade. But once set, don't change it. So this actually makes you think a lot about the trade before you place the trade. Okay, so if now you have this trade, you have this idea, and you are trying to get in, but you can't find a good levels to set up your stop loss and take profit, maybe you shouldn't take this trade. It's not coming 2-to-1 or even 1-to-1 at risk management. You shouldn't take this trade. If you are going to risk 50 pips to gain 20 pips, this is not a good trade. So you have to manage your stop carefully. The 10th advice or strategy, don't give up. Okay, there comes a point in every trader's life when it just seems not worth it anymore. Okay, don't let yourself be intimidated. Trading is tough. Okay, trading is tough, but you can win. Okay, on the other hand, if you truly feel that this is not for you, then maybe it's not for you. Just like anything in life, everything is not for everyone. So take a break, try to figure it out, and whatever your decision is, make it wise, make it while you are calm, and take the right decision. So this was 10 strategies or advices you should take consideration of before you trade, so fear or greed or any emotion doesn't control you. If you have any question, please feel to me. And while I wait for your question, I will go get a live trading example. Okay, for example, today we had this, this is the euro dollar, the euro against the dollar. You know, today we had this news about the interest rate from the European Central Bank. Actually, the market predicted that the bank will fix the interest rate, and actually the bank actually really fixed the interest rate, so there was no big impact on the euro dollar. But then some news came out for the US dollar, the unemployment rate, and it was not in favor of the dollar. So for some time it was like going up and down. In the long run, if we are going to apply what we talked about today, maybe we can buy the euro dollar. So if we try to place a trade in this short, this is a $5,000 account. We apply the principles that we already mentioned. So stop loss should be somewhere like here or here. This should be the levels of stop loss. If we have a take profit level, it should be like here or here. So as you see, this is like more than 2-to-1. This is a good trade. So as I mentioned, I'm doing all of this before I didn't place a trade. There is no money on the table right now. I'm thinking wisely with logic, without any greed or fear. Let's make this with green so you know this is take profit levels. When we have this calm mind, we have the ability to think, to make our decision. This is the take profit zone, and this is the stop loss zone. We should have this. So for example, if we decided to have it here, our stop loss in this way, let's go with one lot. Okay, and we will have our stop loss in the under the levels we just mentioned here. Okay, and we will have our take profit here. Oh, I think it went far more. Okay, so if this is the levels we expect to have our stop loss and take profits, yeah, it should be here. Here. So this is now a trade. I placed this trade. I will never touch the stop loss or take profit, even if I see the market going to my take profit or stop loss. For example, some traders do the following. The market is moving against me, so let's just, you know, go a little bit lower for the stop loss. So they move the stop like this. This is wrong. This is fear. Okay, or the opposite direction. The market is going to the take profit level here. You see. So let's the trader say to himself, let's move this more because the market will go more. Never do this. I'm now giving you a live example in the live market. Actually, this is a good trade if you follow the euro dollar for the upcoming days. It should be predictable to be in the up direction, the long direction. So you shouldn't do this. You should just keep your stop loss in the level here. This is a good level, and the take profit in this level. And actually, if you take my advice, you should, after you place the stop loss and take profit, close your screen. Go do something else. Go to follow up with your other trades or other work, or even stay with your family or read a book or go to lunch. Leave the trade. You already did your work. Let the market do the rest. Okay, you already did your job. Let the market do its job. Okay, you will never move the market. Okay, right now we are just witnessing the market going a little bit to our favor. This is if we have some greed, we may take more position, more volume, just because we have greed. Okay, or the opposite, if the market just moved 2 or 3 pips against us, we just close the trade. Don't do this. Okay, I will just leave this trade. It should hit either stop loss or take profit. This is a live example of what you should do in the controlling emotion. So why we have this trade, how we decide which direction, how we have the complete trading plan. I will talk about this in the upcoming webinar. It will be in the upcoming Thursday, 6 p.m. Dubai time. You will have the opportunity to register from our website. You will have the link to registration in our website and also in our social media. If there is no more question, I will now be happy to end this session. Hopefully, we will meet very soon, inshallah. So I think there is no more question. Please join our upcoming webinar in the coming Thursday. It will be about how to make your trading plan. Thank you for your time, and I will end this now. So goodbye.